So what we're seeing is once there's been a big wave of BTC investment in the past few months, there's been a rotation and a higher demand on Ethereum. So this led to a big increase in demand on that side, and definitely made Ethereum put Ethereum in a much stronger position in terms of traditional finance investors' demand.
Hello, you're watching Proactive. I'm joined by Matteo Greco. He's Senior Associate at Fineqia International. Matteo, very good to speak with you. Despite a 5.5% fall in overall crypto market value, ETP assets only dipped by 2.5% in October. What does this tell us about institutional appetite for regulated crypto exposure right now?
Hi, Stephen. First of all, as always, thanks for having me. Jumping to your question, I think it's a trend that we've been seeing for basically almost 2 years at this point, since early 2024 with the Bitcoin spot ETFs approval, with where we're witnessing. Obviously, we've been on a upward trajectory overall, but even in situations like the last month where the market price action is not really as good and we see price falling, the demand for crypto ETP products still remains somewhat stronger. Obviously, there is still an impact, but it remains stronger compared to the underlying itself. And I think where the big difference lies in the cohort of investor that these products are aimed for versus the crypto native investors. There's a lot more institutional purchasing ETPs, and even when it comes to retail, people that are used to buying traditional assets like S&P 500, Nasdaq, those kind of exposure, they tend to have a much longer term vision on it, while the price sensitivity for crypto native investors, it's much higher, and it's always been a lot higher. So I feel like this big discrepancy, it's really because of the different type of investors that are tapping in and investing into these two subset of the market.
Bitcoin ETPs held steady even as the price dropped, now accounting for roughly 7% of total Bitcoin supply. What's driving this sustained investor confidence and inflow into BTC products?
We can, I believe, refer to what I just said before. Bitcoin is probably the best example and use case of what I briefly mentioned. There's definitely a lot of institutional interest now into Bitcoin. We've had Bitcoin ETPs in Europe for quite a long time now, but obviously the early 2024 approval in the US was a game changer, because as we know, the bigger capitals are in North America, US especially. And obviously, there's been now the possibility for a big and wealthy cohort to get direct exposure to these assets compared to the past. And in addition to that, we also have seen a lot of digital asset treasury play this year. So if we took into account not only the ETPs, but also these and also the various unlisted funds, the supply that is held by institutional would be much, much higher. So this is just a reference of how strong the investor appetite from the traditional finance side and the institutional side has been for the asset. And obviously, when there's strong demand coming from people with high capital to invest, obviously the demand will be extremely strong.
Moving on to Ethereum, Ethereum ETP saw nearly 90% growth in assets this year despite price weakness. What's behind this institutional accumulation, and how do you see Ethereum's role evolving in digital asset portfolios?
I believe Ethereum is following sort of the same trajectory that it has followed in the crypto native market a few years ago. So what's happening now is that obviously the Bitcoin ETPs, ETFs have gained a lot of traction and credibility, and investors made a lot of profit because the price action in the past couple of years has been really strong. So what we're witnessing now is that in the last few months, investors started to want to get more exposure to the asset class, more exposure to the crypto market, and obviously the way you want to do it is either you invest more into Bitcoin related products, or you start to try and diversify and get more assets exposure. And Ethereum has been the second most capitalized asset for years and years now, and it's the most traded and with the highest demand following BTC onto the traditional finance side of things. So what we're seeing is once there's been a big wave of BTC investment in the past few months, there's been a rotation and a higher demand on Ethereum. So this led to a big increase in demand on that side, and definitely made Ethereum put Ethereum in a much stronger position in terms of traditional finance investors' demand.
Mm. Altcoin ETPs pulling back while basket products are rising. That suggests a flight to quality. How are investors adjusting their crypto exposure amid volatility? And what trends should we be watching heading into 2026, Matteo?
We're seeing a lot of uncertainty in the macroeconomical and geopolitical side of things lately, and obviously this usually impacts the risk on assets. Clearly, what happens is crypto tend to be perceived as a less safe asset class itself, but Bitcoin mainly and also Ethereum partially, I would say, are getting a more credible position in terms of how people perceive them, even in the moment of downturn. Obviously, when it comes to different altcoins that have much less liquidity, much less trading volume, much less capitalization, we're not there yet. So what we have seen from the traditional finance side of things, but to be honest, mostly even in the crypto native side, is the risk action with investors trying to, as you mentioned, a flight to quality action and try to limit the exposure to either different asset classes for people who wanted to maybe invest in stock and bonds if they perceived as a safer exposure at this stage. But even in the crypto market itself, there's been a research for a safer exposure. That's why we've seen high demand for Bitcoin and Ethereum. And the reason why we're seeing basket outperforming altcoins in terms of demand recently is because obviously basket a lot of times involve a big chunk of Bitcoin and Ethereum in their portfolio composition. So they've been preferred recently to single different altcoins that are not perceived as safe in this current scenario. So this is the current situation, I believe. For 2026, I think there's a lot to see and play because the uncertainty is really high at the moment. So I believe it's really tough to make prediction. We'll have to see how things play out, especially from the US with all the tariffs and the geopolitical tensions, and then will be maybe clear what we can see in next year.
Well, Matteo, thank you as usual for your insights. Great speaking with you.
Thank you, Stephen. It was my pleasure.
Matteo Greco is Senior Associate at Fineqia International.